I'm going to get started with some of South Africa's key themes to think about in 2022. Now, there are quite a number of developments that have taken place recently in the market, but there are a few things that really stand out for us here at Frontier View that will be shaping the outlook for the country. So I think one of the most important takeaways for South Africa in 2022 is the fact that the country's growth outlook has actually been revised upwards for 2022. We've recently increased our growth forecast for this year, mainly because of a significant improvement in export revenues and fiscal revenues for the government as a direct result of very high commodity prices. However, what we are seeing is domestic demand, especially B2B demand and consumer spending demand growth, will remain relatively subdued. So we are going to see higher headline growth in South Africa this year, but actually, in many cases, we're seeing a deterioration in domestic demand conditions. And this is because of inflation, which is expected to reach a 10-year high, and we're also expecting to see continued government spending cuts over the next couple of years in real terms. But there's always a bit of a silver lining in South Africa's case. We are seeing a tentative recovery in the tourism industry, although it is quite slow. And the government has delayed tax cuts. Government has delayed tax increases into 2023. So we were previously expecting quite significant tax increases during the February budget. These have been largely delayed. This provides much needed breathing space for businesses in South Africa over the next year or so. So when we look at the macroeconomic outlook for South Africa, we're actually going to get started with South Africa's context in the Sub-Saharan African, South Africa's position within the Sub-Saharan African context. And it's really always worth remembering that South Africa's economy kind of shifted down a gear after the 2008-2009 financial crisis. This was partly a result of the fallout from the financial crisis. South Africa was very exposed to that, but also because of the change in leadership in the country. So we saw Jacob Zuma become president and a real shift in the way that the country was governed. And we also saw an increase in corruption, but also a significant deterioration in electricity supplies in the country. As a result, South Africa has underperformed the Sub-Saharan African average. And this really reflects some of the structural economic problems that the country is facing over the long term. As you can see, even before COVID, the economy was really struggling to grow. What we have seen in 2021 is South Africa's economy growing by about 5%, and this exceeded the annual average for Sub-Saharan Africa. However, I will emphasize that this is because of the very, very steep contraction that we saw in 2020. So it's really a result of the base effect created by the contraction during the onset of the COVID pandemic. So although South Africa's economy grew faster than most of the rest of Sub-Saharan Africa, I wouldn't read too much into this in terms of an improvement in the country's fundamentals.
And Matt, maybe here it's important to quickly share with our audience, what are those structural factors that are weighing on South Africa's growth outlook? Because they're here to stay with us, despite a lot of the short-term volatility we're going to discuss. Can you give us
Yes. So there are some fundamental underlying problems that South Africa is facing. So the first is we have chronic power shortages, and anyone who operates in South Africa will be familiar with this. This is something that is pretty fundamental when it comes to supporting or detracting from growth in the really productive industries that South Africa historically has had a competitive advantage in. So the mining industry, the manufacturing industry in particular. Those are two very big export earners, but also very big generators of employment. And with very high energy costs and energy shortages in the country, those industries are really suffering as a result. We also have structurally very high unemployment. In fact, South Africa's unemployment rate, not only has it reached its own record high, it's also the highest officially in the world. And so this really drags down on economic demand, aggregate demand in the country. We also have a deteriorating fiscal, the government's fiscal position has deteriorated gradually over the last 10 years as well. So what we have seen is that the government has been borrowing a lot more to meet its spending and investment needs. And as a result, the country's growth prospects are really being dragged down by a deteriorating fiscus. So those are the three main reasons why the country faces quite a difficult outlook in terms of growth for the next couple of years.
Thank you, Matt. I guess this means just the lasting concerns around margins, operating costs on the electricity and energy side, talent questions, and also, of course, fears of some of the tax hikes that we're always anticipating in potential budgets because of these structural issues. So good to have a recap of those, but I'll let you continue.
Great, thanks very much. So when we look at the most recent full year of growth that we have available, so when we look at 2021, what we have seen is that the economy grew by about 5%, which was better than we expected. We were previously forecasting about 3.5% after a contraction of about 7% in 2020. The reason why growth surprised us to the upside in 2021 was because of significantly stronger export revenues driven by much higher commodity prices and a rebound in services industries. And this was partly because of a reduction in COVID restrictions that took place a lot earlier than we were expecting, but also we saw a boom in ICT activity in South Africa. We saw this across the world. South Africa was particularly well set up for this boom because of the relatively sophisticated nature of the economy, but also because of the infrastructure advantage that South Africa has. But it's also worth remembering that growth was extremely uneven between industries in South Africa in 2021. Quite tellingly, we saw that electricity production fell in 2021 compared to 2020, and this has weighed very heavily on the power-intensive industries of construction and manufacturing. Bear in mind that in 2020, when aggregate demand fell by 7%, we would expect to see electricity production and consumption increase in 2021, but it actually fell. And so this is quite a good illustration of some of the structural problems that the country faces. So when we look at the outlook for the economy, it's worth thinking about the story that's on everyone's mind at the moment, and that is particularly around the Ukraine conflict. So South Africa's economy is directly exposed to the implications of the Ukraine conflict, both in the short term and the medium term and into the next couple of years. I will emphasize that there are both positives and negatives for South Africa's economy. And in fact, South Africa, out of all the economies globally, stands to benefit the most from the fallout from the Ukraine conflict. And this is because South Africa produces a lot of the commodities and raw materials and precious metals that Russia produces. What we have seen over the last couple of months is energy traders, commodity traders scrambling to secure volumes of exports from South Africa. And I'm thinking mainly about iron ore, coal, precious metals, including platinum. These are all produced by Russia, but South Africa often is a close second in terms of volumes produced and exports globally. So what we are seeing is a significant uptick in demand and an increase in prices for South Africa's exports. So we are going to see much stronger growth almost as a direct result of the Ukraine conflict. However, South Africa is not insulated from the negative fallout from the Ukraine conflict, and this is around energy prices in particular and food prices as well. South Africa is slightly insulated from the effects of higher food and fuel prices because the rand is going to be very strong over the course of next year. So this will curtail the worst effects of higher imported food and fuel prices. But in any event, South Africa, can't avoid the worst of the high global fuel prices. So we are going to see a significant climb in food and fuel inflation over the next year or so. This is particularly relevant for South Africa because consumers and businesses are very price sensitive because growth is very low in the market at the moment.
Hi, my name is Krista Regani, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.